Existing home sales continue to fall in December as home prices remain elevated. This comes as mortgage rates continue their downward trend, now well below 7% for a 30-year fixed rate mortgage. This move in rates boosted home builder confidence, but is it enough to bring buyers and sellers back into the market? Joining us now, we've got Lawrence Yun, who is the National Association of Realtors chief economist. Lawrence, your ears must have been burning here because we were just talking about you and the team's report and the reading here. First, if there's one high-level takeaway that you can kind of use to encapsulate this market that you're seeing right now, what would it be?
Well, thank goodness that 2023 is over because this year already we are seeing a stir of interest among buyers responding to those low interest rates. The mortgage purchase applications are up. The opening of the lock boxes to view homes are up, and our realtor members are indicating they're getting more phone calls. So people are responding. I think the worst in home sales is pretty much over. And interestingly, because of lack of supply, home prices continue to rise. So for 85 million homeowning families across the country, they are smiling. They have seen their housing wealth rise. I think the frustration is really with the first-time buyers, really difficulty, but now with interest rate dropping, providing some relief to retry the market.
So Lawrence, do you think that this is the bottom here then for existing home sales?
For the home sales, yeah, definitely. I think it's pretty much the bottom. Every time interest rate drops, after 2-3 months, there's always a response. So we know that interest rate was high at 8% back in October, but since then it has come down. So this is almost 3 straight months of interest rate decline, and we do anticipate that the buyers would be responding to this. But in addition, I think the sellers will be responding. I think there are many sellers who have been delaying their decision to move when the interest rates were high, but with interest rate now coming down, they say, well, the cost of giving up my low interest rate, well, there's a little pain involved, but not greatly as if the mortgage rates were 8%. So I think more supply will also come.
Yeah, and Lawrence, and also to point out the massive run-up, right, that we've seen in home prices, given the fact that inventory is so low. So those that are still out there on the market or in the market trying to buy these homes have really boosted the pricing of some of these homes. What is your sense just in terms of what that pricing activity then is going to look like?
The inventory condition is still low. 1 million homes available out there currently, 1 million. But this is an improvement from 1 year ago. Now, I would like to see 2 million homes on the market so consumers are given wider choices. There will be less hurried decision, without that intense multiple offer situation. But with increased demand, naturally, that's going to begin to put upward pressure on the prices unless we have more supply. Good thing that builders are ramping up production. And furthermore, I think some of the delayed home sellers will begin to reach the market this year. So overall, I see the growth in inventory throughout this year. Maybe we get 30 or 40% more listing. That's clearly welcoming trend, giving the first-time buyers a better chance to enter the market.
Yeah, big home sales energy this morning, Lawrence, as we think about as well the Redfin report that pending home sales rose 4% in December. That's the biggest jump in over 2 years, they say, and really citing the average 30-year fixed mortgage rate falling to 6.82% in December from that 7.44% in November, that driving people back into the market here. Is there one specific cohort that you would say we need to see enter back into the home buying market in order for us to see a larger or continued shift?
The latest data show 29% of all buyers being first-time buyers. That is too low. We need to see that figure at 35%. And furthermore, the age of the first-time buyers, which recently has been in the mid-30s, we want to see that entry point, the age when people enter as a first-time buyers, close to the more age of 30, which used to be the case. Because we want that home ownership opportunity, the American dream opportunity for more Americans, starting from at a young adulthood in their late 20s, early 30s. So if we see that, then we clearly know the path is going in the right direction.
Lawrence, on the new home side, though, and we've been talking about existing homes quite a bit, but new homes as well, are we still behind in the number of homes that need to be produced in order for there to be ample supply for potential new home buyers to get into?
The new home construction market actually will squeak out. It looks like they're going to squeak out again this past year because they can create inventory. But the amount of creation of inventory is still insufficient, especially in light of decade of underproduction. So to compensate for decade of underproduction, the builders need to quickly ramp up production. America has a housing shortage. People, especially the renters, are burdened with high rent. The potential first-time buyers, they're looking at record high home prices. Only way to alleviate the price pressure is to have more supply. So everything to assure that we have more supply coming onto the market, maybe less regulation, maybe looking at the rezoning rules. So anything to provide more facilitation for construction that will be good for America and for economic activity.
All right, Lawrence Yun, always great to get your insight. Thanks so much for hopping on here and joining us for this breaking news. National Association of Realtors Chief Economist. Thanks, Lawrence.
Thank you.